Prior to the Brexit referendum, the UK and Europe were two areas that many asset allocators viewed as attractive. Now, I spoke to Haig Bathgate, joint CEO of investment management firm Tcam, about how significant the UK's decision to leave the EU changes the outlook for both regions.
I think in the short term it has quite a large impact. We were actually quite negatively positioned on the UK, but quite positively positioned in Europe coming into this. Inevitably it slows down transaction activity. There's this general period of uncertainty which just slows down economic growth, and obviously we're going to go into negotiations about how we actually move out of the EU, which has an impact on both the UK and Europe. So I think it will continue to have a short-term impact, and it probably makes both regions less attractive as a consequence. However, clearly we've had a huge devaluation in sterling, now down over 13% against the dollar. So everything has a price, and certainly for the first time in about 5 years we're starting to look at UK exposure again and gaining more exposure to the domestic UK economy.
So speaking of trade deals and the strength of negotiating positions in terms of the UK and Europe then, if we take a look at the impact of the Brexit on UK exports, how strong or weak is the UK's hand then?
Well, I mean, it's quite an interesting point, and of course the reason that we were negatively positioned on the UK coming into the referendum wasn't because of the referendum itself. It was because the UK is running a twin deficit in the form of a current account deficit, which means we're importing more than we're exporting, and also a fiscal deficit, which means that we're spending more in public services than we're bringing in tax receipts, and all that has to be funded through ever-increasing debt. The only advantage to that is clearly when you're going in to negotiate with your biggest trading partner in the form of Europe, and the UK, for example, is the largest export market for German car manufacturers. So there's lots of grandstanding on both sides clearly at the moment, and there's going to be an intense period of negotiation. However, the UK is probably less reliant on Europe than the other way round when it comes to trade, which puts us in a pretty strong position.
What about the financial services sector then? Because obviously this is quite a big worry, especially in the city, in terms of the impact.
Yeah, that's right, and that is the one area where clearly we're exporting more than we're importing. The financial services sector is quite reliant on what goes on in Europe, and also the UK is the base for a lot of international banks' headquarters in Europe. So that will be the period or will be the area where there will be negotiations coming back the other way, and there'll have to be some ground given probably by the UK to retain that status.
Well, while the UK's decision to leave the EU was undoubtedly unexpected, especially in the city, I mean, do you think this could be a catalyst for further referendums across the EU?
I think so. It's certainly caught the attention of the global community. I think it's quite different for some of the disaffected countries within Europe. So we know there's discontent in the Netherlands at the moment, and in France as well with the rise of Le Pen. There's clearly friction there about where these countries sit within the European Union. However, they are much more integrated than the UK ever was. They've adopted the euro monetary policy as set by the ECB for those countries. So I think they're in quite a different position, and they'll probably take the view, I would imagine, that it's better to negotiate from within the eurozone than coming out.
Last but not least, Haig, if we take a look at the UK and Europe, there is evidence of a disconnection between the real economy and the stock market. Now, whilst economic uncertainty is obviously unlikely to remain currently where we are, do you see opportunities in the market at present? Yeah,
we're certainly seeing opportunities. I mean, where there's big periods of uncertainty, that always creates opportunity. As you say, the UK stock market is an international stock market. It's not really reflective of the domestic UK economy. 80% of earnings in the FTSE 100, for example, come from out with the UK. So it doesn't really come as a surprise to see the UK market moving higher, even in the aftermath of the Brexit vote. So there are opportunities, but clearly there are different reasons you would invest. We're becoming more constructive in the outlook for the domestic UK economy. The UK economy has shown historically that it responds very well to reductions in the value of the currency, but we would tend to do that through FTSE mid 250, FTSE smaller companies rather than through the FTSE 100.